Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Phil, we are live in the UK, aren't we? We are not in Vegas.
We're not in Vegas, no. There's a lot of people in Vegas.
There are a lot of people in Vegas.
Well, enough, it's a popular one, that one, Curtis.
You know what? Having been to the various NADA conventions around the States, Vegas is always the most popular one.
It is.
I can't think why.
No, not at all. What goes on in Vegas stays in Vegas and all that lot. But yeah, no, it is. I mean, it's post-pandemic now, back to some kind of normality. There are a few sort of motor shows that have sort of either declined a little bit or actually ceased a little bit. But this is, the one to go to, and especially with things that the automotive sector are now facing, you can understand why it's such a popular event this year, and there'll be a lot of people trying to understand what's going on and what solutions there are out there to help their business. So I can imagine it's going to be a very, very busy one for both suppliers and attendees.
Yeah, definitely. And I mean, it's always well supported by UK dealers. There's always a good size UK delegation out there. And the event runs from Thursday through to Sunday. And just go on to LinkedIn, because there'll be lots of coverage, lots of chatter from the event, and hopefully, some sharing of sort of good practices that are being picked up out there.
Yeah, you're right there. I think, that one thing that does happen is that, people do talk about what they've seen and heard over there, and they bring back ideas and they share those ideas. I know we'll talk about Dale on next, but I know Dale's gone over there and he's put a thing out on his LinkedIn that how can we, help collaborate in the virtual space around some of the learnings that are going to be sort of taken from people attending the NADA show. So yeah, I think you're right. I think there's it's very well attended, very well shared in terms of that insight. So look forward to seeing some of that, the videos and the output and the insights from it.
Yeah, definitely. I mean, just final thought on NADA, because I know that there is a sort of feeling that, oh yeah, it's a jolly, but from my experience, there were dealer groups that went out there, and you can't go to every speaker's session. So if there were several of them in that particular group, what they did was they carved up the speaker sessions and then had a debrief, not just at the end of the day, but when they got back to the business in the UK, so that they're spreading what they've picked up, some of the sort of top tips, and the way the US does things differently, approaches things differently, and sort of added value to the visit and made it worthwhile. But having said that, there was certainly a lot of activity in the bars at night as well.
It's non-stop, isn't it? I mean, you serve to do some of your steps, don't you? I believe so.
Oh yes, yeah.
Over there, and don't get much sleep, and then you've got your travel at both ends as well with
yes.
So yeah, I know that it's a very tiring, non-stop event to go to, but obviously worthwhile in terms of the insight and collaboration that comes from it.
Yeah, definitely. And you mentioned Dale Wyatt, and shout out to Dale, because he did message me on LinkedIn during the week to bring to my attention, funnily enough, that Suzuki has done rather well again in the Customer Services UK Customer Satisfaction Index. This is this survey that's carried out twice a year, and it's not just purely automotive, it's across different sectors, different retail sectors. And Dale told me that Suzuki held the top slots. This is the 7th time in a row as the best performing automotive company in the UK in terms of customer satisfaction, and actually 22nd across all 259 companies that were in the rankings. So, an amazing achievement there for Suzuki. Once again, punching above its weight, delighting its customers, and we know its dealers are happy as well.
Yeah, I mean, Dale does, as we know from having him on the podcast numerous times over the years. He works very closely to his with his dealer network and listening to problems they've got and opportunities that they can be supported with, etc. So you can kind of see where it's a continually growing network of dealers they've got there. So I mean, it's fantastic result, fantastic for Suzuki and for their dealer network.
And we have some news before we get into the headlines this week, Phil, because this is a story that's been rumbling on for some time, and we've certainly covered it a number of times on the podcast, and that is Lithia Automotive actually concluded its acquisition of Pendragon during the week. So that was the £397 million acquisition, and this follows approval from the Competitions and Markets Authority, as well as the Financial Conduct Authority. So so this actually consolidates Lithia's foothold in the UK, obviously following its acquisition of Jardine Motors last week, and that was followed last year.
Yes,
followed by its acquisition of Arden Group. So Lithia now have a major presence in the UK.
Yeah, and it's now going to, I think, this is the first stage of it now, because then it's the breakdown between the dealer group and then what happens with the Pinewood Technologies side of the business, and with Bill Berman taking that alongside other senior execs, and the way that board is going to be made up with non-execs from Lithia, etc. So and some of those shares will remain on the stock market for the Pinewood. The retail business will be delisted as Pendragon and go under the private equity of Lithia. So there's a lot of the complexity now needs to be worked out in terms of their shareholding and leadership. But no, I think that they say it's now can start to do that now, can't they, and move on. So it's a big news and a big deal that's now been concluded.
Yeah, and I think we posed the question last time, what will they do with the Pendragon name? Because it's not a customer-facing brand. So, we'll just have to wait and see what happens to that.
We will. And this week, we've got an extract from a friend of the podcast, Mike Allen, that we shared the interview with Mike earlier on in this week. And he was started talking around his new job and role and heading up that new Cambria Automobiles startup investment business, and sort of working across that dealer and mobility solutions space. So if you've not listened to the complete interview, that'll be on your podcast feed, but we will share a quick extract from that just to give you a flavour of the conversation that Curtis and I had with Mike Allen.
And we're also joined this week by Stephen Whitten, who joins us for his latest Menable moment. So we've got a pretty packed show, haven't we?
It's a busy one, yes.
You're listening to the Motor Trade Radio podcast, powered by Motors.
So headlines this week come from Sky News, Car Dealer and Motor Trader, starting with average used car prices dip 1.6% in January, reports Motors. Inchcape invites suitors to drive off with UK retail arm. Group 1 set to axe about 10% of UK jobs in first 3 months of 2024. Motorpoint issues profits warning due to fall in used car prices. And we ask if the FCA is effectively banning car dealers from selling gap insurance from February. But before we chat about the headlines, here's our extract from the interview we did with Mike Allen, the industry analyst familiar to many listeners, who now heads up the Cambria Private Capital business, the startup investment arm of Cambria Automobiles.
Yeah, I mean, I think it stems from problem solving as well. And I think one of the big problems we're all seeing in used car retailing at the moment is confidence in EVs, and helping consumers have that confidence, and maybe battery technology and how batteries degrade over time, and certification is a potential solution there. The customer journey in terms of working with dealers in a hybrid way, in a smarter way. Niche solutions that improves that journey is another way of doing that. But I think the big problem at the moment is EVs and getting people's confidence in that, and it's a huge problem to solve.
And I mean, you touched on it slightly earlier about the size of the mobility space and complexity, but as I say, there's many moving parts within it from all sorts of areas. And you mentioned a few there in terms of fintech. You talk about AI, talk about the evolution of EV. But I mean, are you, and as you said there, that VC is more about that 5-10 year future. Where is the industry heading? Are you seeing anything that's starting to emerge already? Of significant trends that you may not have thought of before you got involved with this space, because it's not an entirely new area for you, but you're now dealing with these, startup businesses, these entrepreneurs that are thinking 5 and 10 years ahead, and they're not thinking of tomorrow, the end of the month, the end of this year. They're thinking of where the industry is heading. Are you noticing any emerging trends from what they're looking at and what they're getting involved with?
Yeah. So again, there is some complexity to this. So, we're not making bets on what's going to happen in 15 years' time. There's a lot of people in Silicon Valley that will do that now, and they will, particularly around AI. I mean, hundreds of millions of dollars was raised in finding the single AI solution. To me, that's betting on a horse race, and that's not what we're going to do. Clearly, AI is going to be a part of the ecosystem and the customer journey, but ultimately, it will be owned by an Apple, a Google, maybe some of the OEMs. So it's working with companies that can utilize these off-the-shelf AI solutions and bring it together within the ecosystem. So we're not.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Well, I mean, as always, Curtis, I think, always great chat there with Mike. It's great to have him back on the podcast after a slight break, after, taking on that new role with Cambria. So, as I say there's a lot more in that interview. We cover a lot of things, not just, obviously, what this new business that he's heading up on behalf of Cambria, but actually how he also sees the market as well. And quite interestingly, we're talking about Pendragon and Inchcape and others today, but, we have shared and had those conversations with Mike over the years as to what's happening in the sector.
Yeah, definitely. It was a fascinating chat, and it is interesting what Cambria are doing there, helping invest in startups that are already up and running, really, and seeing where the synergies are with dealers and mobility solutions. It'd be great to get Mike back on the podcast maybe in 6 months' time, just to he can then talk about some of the businesses that they have supported and what they're doing now. So do check out the full interview. It was a real eye-opener, I thought.
So heading on to the headlines, and the exclusive here from Motors is the latest in the market view, which is the report that we talk about on a regular basis, which is identifying the movements within the sector there, and as Curtis said right at the start there, that the average used car prices dip 1.6% in January as EV price realignment continues. And this is talking about that the average price of used cars are down 1.6% month on month and 10% year on year. And the EV price is biggest fallers by fuel type, down 3% month on month and 17% year on year. And that the days to sell average of 43 days is slower than in December, but faster than January 2023.
Yeah, as you say, this is the market view, and full disclosure, because I do work with the guys at Motors on the market view press release, and it is an interesting one, this, because having spoken to Darren Martin last week on the pod about how trade values were moving, this is very much sort of retail focused. Yeah, what are dealers seeing? What are customers seeing? So as you say, prices dipped 1.6% in January, and that's actually to their lowest point in 15 months. So similar to what we've been seeing on the trade side with values, prices have been coming down steadily over quite a long periods now. So the price of vehicles listed on Motors average £17,113 in January, following a succession of these monthly falls over the course of last year. And that means that price is actually tracking at 10% below their peak, which was actually January last year, when they peaked at £18,903. And what Motors are saying is this downward movement illustrates the ongoing realignment of prices in recent months, but also coupled with the impact of fewer younger cars entering the used car sector, which is something that we've talked about a lot on the podcast, Phil, and really following the slowdown of those new car sales during the pandemic. So that is that is influencing used car prices.
Yeah, and we mentioned there at the start about EVs. We can't talk about the market without talking about EVs in some form or another. But as I say there, that the electric vehicles, they did experience, as I said, the biggest drop by fuel type, falling that 3%. Now, that equates to 28,215, and that's down for £740. And 17% year on year, down 5,766 in terms of monetary terms. But hybrids were also down 2% to the month, to 24,938, whilst diesel also dropped 2% to 15,475, and petrol 1% down to 16,344. But I mean, it is now, as you say, with as the header says, it's this realignment continuation, albeit a little bit slower than we saw in the fourth quarter.
Yeah, and the market view also looks at stock levels and days to sales. So within the research, it's identified that the growing inventory of older EVs is contributing to an overall reduction in their average price. And there's certainly a number of big drops over the course of the month. Really led by the MG ZS, which was down 11%. But inventory levels across the board dropped month on month from 52 units in December to 45 units, which was really a result of dealers stocking up immediately after Christmas, which again parallels what Darren Martin was telling us about the activity that he was seeing from dealers from Boxing Day onwards, as they were going online to restock cars in time for January. So while month on month inventory levels were down, year on year they were pretty much on a par.
Yeah, and as we say, as always, do check out the full report that will be on the Motors website in due course. And they say within that, it shows you a stock profile by each sector in terms of car supermarkets, franchise, independent. More about the prices comparison that we've just talked around there. Demand, obviously looking by sales channels in terms of car supermarket, franchise and independent dealers, and then looking at the whole fuel sector in terms of the vehicles in demand and average prices, etc. So a lot more detail than Curtis and I have covered there actually in the report when it becomes available on the Motors website there.
First headline of the week from the media is actually from Sky News, and the headline there is Inchcape invites suitors to drive off with UK retail arm, which is a great headline, and it's actually a fascinating story, and it was picked up by the dealer press over the course of the week. So within this, I mean, it seems to be a very well sourced story. So the story is that Inchcape, obviously the listed group, is exploring a sale of its UK retail business, a deal that would herald another phase in the industry's ownership shake-up that we've certainly been talking about over the last few months. So the piece goes on to say that Sky News has actually learned that Inchcape has begun sounding out prospective buyers for its domestic dealer operations in recent weeks, and bankers at Rothschild have been hired to oversee these talks with potential bidders, with analysts suggesting earlier in the week that the UK retail arm would be valued at several £100 million. So this is an interesting development, isn't it? Because Inchcape is quite unique in that across Europe, its real strength is in distribution. You know, it acts as distributors for OEMs in a number of different countries. And whenever we report on Inchcape's financials, it's always difficult to split out what UK retail brings to the party in relation to the wider distribution business.
Yeah, you're right. I mean, it wasn't up until recent years that UK never even got a mention in the financials. I mean, we just talked about Mike Allen right at the start there, and his time at Zeus. It was always, you know, UK profitability and performance wasn't really mentioned in any of the Inchcape financials until recent years, and it's always been speculated that, you know, how long will Inchcape remain in the UK retail franchise sector. We know over the years there's been many speculations that they will exit the UK retail sector at some point. You know, they were reported several times when they started to sell off and realign some of their sites, and whether that was the start, and then it kind of went really quiet. So it's been one of these things that's been bubbling in the background. But it is interesting that, as you say there, Curtis, that, you know, people just assume they are this franchise retail dealer, and they don't realize how big the business is in that global space, and how they operate very heavily in that logistics and distribution side of their business, which is mainly their core. You know, they were obviously the Toyota distributor, weren't they? You know, for many years in the UK was their biggest part of UK activity. So yeah, it's going to be interesting. I think the biggest question is who's going to buy it. You know,
exactly.
That's the thing now, isn't it? That this isn't about being approached. This is them making that decision and now going, as you said right at the start, they're looking for suitors that might want this business.
Yeah, and as we know from Pendragon and Lookers, potential buyers aren't necessarily from the UK. There will be overseas buyers who will be particularly interested in this. And it's worth saying that within the story that Inchcape said it is company policy never to comment on market rumours or speculation, while Rothschild declined to comment. So definitely one to watch, I think.
Yeah, I'm sure everybody will certainly be watching this one. So we'll keep a close eye, especially now. You know, there's still the things going on with the Lookers deal that's continually in the headlines at the minute with what's happening with that acquisition and takeover. And now, as we said right at the start of the show, the Pendragon one that's now being approved. So yeah, this is probably going to be the next one that we talk about on a regular basis, Curtis.
Yeah, and the next headline, and this, I mean, talking about overseas owners of UK groups, this is about Group 1. The headline there is Group 1 set to axe about 10% of UK jobs in the first 3 months of 2024. So, this is Group 1 Automotive. The US giant is looking to axe about a tenth of its UK workforce, according to this report, over the course of Q1. And this announcement was made earlier in the week when the Houston-based company released its financial results for 2023, as well as for the last quarter. And within it, Daryl Kenningham, Group One's president and CEO, said, "We experienced challenges in our UK operations during the current quarter with used vehicles and recognise we have some work ahead of us to bring our costs back in line with recent trends. We are focused on reducing costs in the UK in the first quarter of 2024, with an expectation of reducing our UK headcount by approximately 10%. So that really is, from the horse's mouth there, Phil.
Yeah, and it's not unsurprising, is it? I think there's a lot of pressure now, a lot of pressure on costs and performance. And as you know, we done a few of the stories in this week is this availability of products, profitability of products. There's a lot going on in the market at the minute, and these kind of businesses need to look at that cost and that balance sheet to get them through. So yeah, it's not good because we mentioned lookers before, didn't we, in terms of the redundancies and things that have taken place there. So yeah, it's not great news for the sector that you are looking at that many potential redundancies, but the business has got to survive and remain profitable.
Yeah, and again, it's a story that I'm sure we'll be returning to. So moving on with the show. So after the break, we're joined by Menable's Stephen Whitten for this week's Menable Moment, shedding more light on the next of his 5 critical success factors.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest Menable Moment, looking at mental wealth and well-being awareness and best practice in the automotive sector. With me, Stephen Whitten. Yeah, hi everyone. It's Menable Moments time again. Hope you're well. We promised you, didn't we, that we would go through the 5 critical success factors that we've discovered are clearly needed for you to achieve a good place of mental wealth in your people and across your business. And after all, mental wealth equals business wealth. And so let me give you a quick recap of what they are. It's management commitment is the first one, communication, number 2, recruitment, number 3, training as number 4, and purpose, number 5. And sometimes I put recruitment and training around the other way, but you get where I'm going with that. So it's management commitment, communication, recruitment, training, and purpose. Now, we touched on recruitment last time. So this time I want to talk a bit about communication. Now, you would think this is obvious, and you would think that the fact that we, are in leadership positions or have managers or whatever, that communications and instructions and all the rest of it are relatively clear. But we've been doing some work in the last few weeks around exactly this point about communication. And what we've been doing is getting groups of managers together in rooms in the business, not for very long, an hour or so at a time, hour and a half maybe, and just literally sort of going around the room and finding out what's got your attention right now outside of the workplace. So find out a little bit about what's going on for people, and also finding out, just tell us one thing that people in the room may not know about you. And we've had some fascinating stuff. Some people have had some great things that they've done in their lives previously. We've had some fun with that as well, and found out some things about people that you would never have guessed that they've done in their early careers, or hobbies and interests that they've had, and so on. So it really emphasizes the point about how important communication actually is. Now, again, we know that's stating the obvious, but the reason I want to mention that is because very often, and we're also still getting lots of people reaching out to us with stresses and anxieties and things that are going on, and they cite poor communication as being one of the key reasons why they feel stressed and anxious in the workplace. They feel left out, they feel that they don't know what's going on, and they feel that, things are happening and they're not being kept informed. And from my experience, what I do know is that people do have a tendency to read more into what you don't tell them than what you do tell them. So I think it's clearly important for everyone as leaders and managers to have a good communication strategy and make it clear to people that, there are going to be times where there's stuff that you can tell them about and obviously other stuff that you can't. But in the main, you're going to be open and you're going to be transparent and also maybe a little bit vulnerable as well and a little bit open about what's going on for you and what's going on in your world. And that actually, as a manager or as a leader, that you don't have all the answers. No one's put you in that position and then suddenly, you're an expert in everything. So that's why communication is absolutely critical between you and your team. Now, what we've found with these groups that we've worked with is spending a bit of time talking about communication and actually opening it up and being honest has actually been transformational. And I don't know why I sound so surprised, because it genuinely is. And for example, with one particular group recently, we've had a room full of sales managers and service managers together, and they talked openly about that age-old thing that those two departments typically don't communicate well. And as a result, what you end up with is a bit of conflict and a bit of issues going on between the teams, and you're then reliant on sort of calling in favours from people that you're close to and stuff like that to get things done. And I think we've pretty much all worked in an environment like that. And as I said, always the answer is clearer and much more effective communication. So we literally are just rolling out some very, very simple stuff. Our Wellbeing Winners program is giving us the opportunity to go in and ask the questions that perhaps people don't really want to be asked in some cases. But what it's actually doing is then opening the door for good quality, solid conversations. And one of those key areas is communication. So it's the second part of our 5 critical success factors, communication. It's probably one of the most critical of the critical success factors, as you might imagine. And if you need any help or support with any of that, give us a shout. From literally getting your team together and having a chat, right the way up to some presentation skills training or whatever it might be, than something I was doing last week. That, again, was a great opportunity for people to just not talk openly about, look, communication's rubbish in our business or whatever, but actually just to develop some much more effective communication skills themselves. So along those lines, I want to give a big shout out to Motors for making a massive commitment to continue sponsoring our Wellbeing Winners program. So if you are a Motors customer, get in touch, because you are eligible for a discount on the initial assessment, and thanks to their sponsorship of the program. So don't let that opportunity go by. And I think, as I've said before, the Wellbeing Winners is not an audit. It's not a check. It's not anyone coming in, criticising, telling you what you're doing wrong. It's actually a good series of solid, looking into what's going on around your business and giving you the opportunity to broach some of those more difficult subjects in conversations and communication and so on, to help you move the needle and move it forward. And the key to all of that is mental wealth is business wealth. So again, as I've said several times, your people perform well when they're feeling good about themselves. So if you want any help and support with that, give us a shout, and you know how to get hold of me, stephen.witten@menable.org. Catch up with you soon. Take care. Bye.
Well, many thanks to Steve for the latest Menable moment there, and some poignant suggestions on communications, because certainly within the industry we all think we're good at it, but could probably do with a bit of a refresher. What do you say, Phil?
Yeah, definitely. I'm just wondering why he was recording it in the Pizza Hut.
Yes, yeah.
And there are other pizza suppliers available. But yeah, protect our brand in there, Curtis. But,
He obviously got in there before hours or after hours.
But yeah, no, he makes some very, very good points there. So as always, if you do need to reach out to Steve, and then please do. You can contact him through his website, which is menable.org, or on email, which is Stephen with a PH .Whitton WHITTON at menable.org, or as we always say, all over social, particularly on LinkedIn there.
Now we've got a breaking news story, haven't we, Phil?
We have, yeah, and lots going on. But one thing that has just broken across the main media, it's been picked up initially by Automotive News Europe, and then across the Financial Times, that Volvo to stop funding Polestar as Geely readies bailout. And this is saying that Polestar is being hit by slower than expected ramp up, together with a cool down in EV demand, and saying that Volvo Cars will stop providing funding to Polestar and will transfer responsibility for the brand to China's Geely, which is also Volvo's majority shareholder. This all gets very complex, doesn't it, Curtis?
Yeah, it does, because Polestar was actually spun out of Volvo and listed separately in 2022, so it's not that long ago. But it says certainly in the FT report that a key new model has actually been delayed, and its shares have actually fallen by 84% in the past year on investor worries about the global electric vehicle sales slowdown, which again is something that we do sort of reference quite a bit on the show.
Yes,
but the business is seeking about $1.3 billion of new funding. So this is a major issue. This.
I mean, they talk about it being shortfall of deliveries. I mean, they're saying that Polestar delivered 54,600 cars in 2023, short of its target of 60,000 cars, which, it's not a lot of cars, that is it, from a shortfall. I mean, it's significant, maybe, but it's still a good performance against a target of 60,000 to deliver over 54,500. But yeah, it's not good news.
No, definitely not. And this actually follows a report that I noticed in the Times earlier in the week about Renault ditching its plans to actually list its electric vehicle business as a separate business, and that was citing sluggish stock market conditions amid a slowdown in terms of EV demand. So there are certain parallels there, because they were going to spin it off as a separate listed business called Ampere, but that's no longer going to happen.
Yeah, I think now we're starting to see this impact of this transition to electrification, this push to do this and to meet regulations and ZEB mandates, etc., at a time where demand isn't quite there yet for that product. But we'll move on. We'll keep you updated any breaking news that we do discover on the headlines each week. But returning to the headlines and returning to Motor Trader, and following up on, we mentioned earlier about the Group 1 and the redundancies taking place at Group 1 and the pressure that's now hitting the sector. And we return to talk about Motorpoint and saying that Motorpoint issues profit warning due to fall in used car prices. Now, obviously, we talked about the Motors data down 1.6%, but we have seen quite a significant realignment, haven't we, in the fourth quarter of last year of used car values against what you might call a subdued retail demand.
Yeah, and within this report, it says that Motorpoint have said profitability for the financial year 2024 is now likely to be £5 to £6 million below expectations. And the group said it was also hit by costs associated with the closure and cleanup of its Derby Centre following flooding. So, some worrying trends here. And it just shows the vulnerability of the used car market and how it's affecting dealers across the franchised, independent and car supermarket sectors.
And Matt Carpenter is quoted in the story as the chief executive officer there at Motorpoint Group, and saying that he's previously commented on Motorpoint's agility and resilience in difficult times, and that he's still confident the group will emerge from this depressed consumer environment as a much more efficient business. So still optimistic that, as they've proved many times over the years, very resilient, and as he points out there, very agile to some of these challenges that we face. And it's a difficult time for them at the minute, but I'm sure they will emerge, and as Mark says, they're more efficient when they come out the other side.
Yeah, definitely. So final headline this week comes from Car Dealer, and it is FCA effectively banning car dealers from selling gap insurance from February. It's an interesting story, this one, and I do urge you to go over to Car Dealer to check out the full story, because it didn't get a huge amount of coverage during the week, although it certainly was the topic of a couple of conversations I had with various people within the industry. So it's the story suggests that sources are saying that the Financial Conduct Authority is about to step in and pretty much ban gap insurance sales. And several car dealer sources, speaking to Car Dealer magazine, said they had been told by their providers that guaranteed asset protection, GAP, could be banned as soon as February the 7th. So what one source said, two of their insurers have been asked by the FCA to just voluntarily withdraw gap insurance from sale from next week or so. So this is again, we've said this before on a couple of stories, but this is definitely one that we'll be returning to, because this is an evolving story. Yeah, we've yet to hear what the FCA have to say about this.
Yeah, and you do feel sorry for the car dealers. I mean, we've talked about all the pressure in terms of financial performance and stock and things like this, but actually, we've got the FCA around the finance and the financial commission taking place in the background that I know retailers are getting questions from consumers about, even though it's basically through the finance regulatory sector. But again, this gap keeps reappearing, doesn't it, for the dealers? Do they sell it? Do they not sell it? Control over profitability and fixed pricing, etc. And we know that, through the transition previously, many retailers stepped away entirely from selling gap and just, cited the consumers to third-party providers, because it was just easier for them to do that than actually, try and sell the customer the gap themselves. So, yeah, as you say, I think it's interesting to see what the findings will be on this, and to see how the FCA and the retailers react to it. So, as you say, we'll probably continue to return to this one, and especially if they say that it'll be banned as early as February. So, I said probably we'll know about this imminently, won't we?
Yeah, pretty much. And of course, this does follow on from the introduction of the consumer duty rules and regs last year, which really made it quite clear how closely the FCA were looking at gap. And I think a lot of it is about the ratios between the amount of policies that are bought and the amount of claims that are made. And this was flagged up by the FCA. So yeah, much more to come on this stories, and we'll keep you in the loop over the coming weeks as this progresses.
Well, that's a lineup of headlines. We did say we were going to get through a lot today, and especially the breaking news partway through today's headlines with regards to Polestar and Geely there. So I guess we'll probably talk about them more next week, I suspect, Curtis, as to what's happening. But plenty getting on there, and obviously ones to watch out now with what's happening with Inchcape and the approval of the Pendragon deal going through. So we'll try and keep you informed as much as we can.
Yeah, that was pretty exciting, wasn't it? Because I don't think we've had a breaking news story live on the show before. But just to share what we were doing, we were sort of frantically exchanging WhatsApp messages as the story broke whilst we were listening to Steve Whitten. And we thought, no, we've got to include it. So I'm glad we did. And that is pretty much all for now, Phil. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.